There are patterns that we can look for.
Interest rates have been essentially close to zero for 12 years. You know, that whole revolution started by Robin Hood. Money goes into the market. But where's the inflation? So Oxford Street will be filled with art galleries?
Elon Musk's investment in Bitcoin. Hello, and welcome to the first episode of Surfing the Curves in 2021. Apologies that we've had a bit of an extended break, but last year was a busy year for EXANTE. This year we celebrate our 10th birthday, and we've got a lot of exciting things happening, so stay tuned to find out more. However, for now, I would like to introduce you to Michael Capone. I haven't interviewed him previously on this channel, but he is the head of sales for Russia and Kazakhstan. Michael has a vast experience in the finance industry. He's worked in it for over 20 years and specialises in equities. Today, we spoke about the various financial market crises and how those might be able to give us an inclination of what could happen to equities post-COVID. We also talked about the deflationary environment that we've been in for the last few years and how deflation could be here to stay. Good morning, Michael. It's lovely to have you with me this morning. Thank you so much for joining me. I know that you're head of sales for Russia and Kazakhstan. And this morning we're going to be talking about financial markets in general, because I know you've got a wide financial background. Firstly, I mean, how long have you actually been living in Russia for? Because I know you have traveled all over the world.
Well, first off, thanks for having me. It's my pleasure to be with you this morning. I've been in Russia for almost 16 years. I originally am from Boston, Mass, and I started studying Russian in college way back in, 1992. I studied in Russia as a student in 1995, 1996, and then I came back in 2005 after I finished Columbia University School of International and Public Affairs. And I've been here ever since, and I've spent most of that time working as an equity sales trader in different banks, all here in Moscow. So I'd say my experience in the financial world is in equities and in emerging markets.
And one of the ways of predicting the future is actually looking at the past. I mean, this is what we've done with the COVID situation. I know when I talked to one of our clients, Andrei Movchan, he said that, if you look at the past pandemics, things like the Spanish flu, those came in 3 waves, and that's exactly what's happened with COVID. So there are patterns that we can look for, a bit like you mentioned astrology. I mean, astrology is all about patterns, I guess. Yeah. So are there any lessons you feel that you've seen from maybe the kind of the Lehman Brothers crash, or any other kind of market crises that we can learn from?
Well, I think first and foremost, COVID isn't a financial crisis, right? It's a crisis in the real world that has repercussions in the financial markets. I think the most important trend that's been happening since Lehman Brothers, since 2008, is the fact that interest rates, the Fed funds rate and the rates set by the ECB have been essentially close to zero for 12 years. And that hasn't happened in the 100-year history of the Federal Reserve. Very interesting chart if you take a look at the chart of the Fed funds rate, for the last 50 years and chart that over the S&P. It's pretty interesting. In a low interest rate environment, that means money is relatively cheap. And in that case, it's it's not a surprise that equities have been rallying, right? I mean, bonds aren't terribly interesting. Emerging market bonds are relatively more interesting than developed market bonds, and I think I know a lot about Russia, and if you look at that and think about it in terms of the carry trade, people are borrowing dollars. and buying, Russian government bonds, that were yielding 7%. Russia's been cutting the rates, that's lessened demand for the ruble. But equities and equity markets, especially the U.S. equity market, it's been driven by relatively anomalous low rates or easy monetary policy for the past 12 years. And the S&P has been rallying. And we had a hiccup because of COVID, but it didn't last very long. Despite unemployment and in the developed world and in the emerging world being at historical highs, and the uptake of employment not happening, and we're talking about more stimulus. And really, so if you look at the U.S. Treasury market, there's probably, in terms of assets, there's more assets in U.S. Treasuries than there are in anything else on the planet, right? So like if you sold every U.S. Treasury, you couldn't buy, and there's not enough assets to buy, right? This whole conversation is leading to the most interesting thing, I think, in the financial markets is, where's the inflation? Where's the inflation? And it's something personally I've been interested in for years, because I don't think that the deflationary forces of technology have been incorporated in people's forecasts. And if you look at 1989, if you look at Black Monday on a chart of the S&P right now, it looks like a bad, not a bad day. Right? Maybe it's just a blip. You're like, oh wow, what happened there? Right? If you remember back then, people were throwing themselves out of windows. Right? There was a recession for almost 4 years. We start coming out of it around 1993. Alan Greenspan is the Fed chairman. He takes rates almost all the way up to 6.5% in 1996, I think it is. And then what do we have? Well, we have rates at 6.5%. The carry trade unwinds. At that time, the darling of the carry trade were the Southeast Asian economies, the Asian tigers, right? Those markets suffered, we saw what then? A disconnect with long-term capital management, and then finally at the end of 1997, we had a default in Russia. I don't necessarily know if it was connected to the rates. But it's something to think about, right? And that link between interest rates, the Fed funds rates in particular, because those dictate the vast majority of assets on the planet, right? And equity markets is, it's an interesting dance. And then going back to 1989, Japan has been deflationary ever since. You could say in part that it's because Japan's population is deflating, right? It's not growing, it's shrinking. And it's really hard to generate inflation in a country where your population is shrinking. There's never one reason for these things. If you look to the U.S., it's excellent immigration policies. I think historically, right? Let's forget blips and crosstalk. Have helped keep the population growing. But where's the inflation? It's a very interesting question. And if you go back to 2018, when the Fed started lifting rates, the market reacted quickly to that. It was a quick sell-off, and where does COVID fit into all of that? So let's say everything gets back on track, and people get back to work. There hasn't historically been any wage inflation for the past 30 years. But let's say people get back to work, the economy starts heating up, commodities rally, and we're headed into the end of 2022. And although the Fed has been very consistent in saying that they have no plans on raising interest rates, to the point where even people, in the Twitter sphere are kind of joking if, they'll never raise them again. Are we Japan? And that's the most critical discussion for, because interest rates link stocks and bonds, right?
Yeah.
So.
But yeah, I mean, but I guess if interest rates were raised, what does that mean for the general consumer? I mean, uh, I think that
I
would come as a
mean,
big shock.
of course, but the economy, all the banks are thoroughly capitalized globally now, right? They've been sanitized, the great financial crisis, people call it the GFC, right? I don't think, in emerging markets, at least in Russia, the central bank's been very diligent about cutting rates. The central bank rate now is around, I think, 4.5%, down from, kind of 2014 highs, which is politically driven, but, I think upwards of like 12 or 13. So, they're ready, for a hike in interest rates, and it's very levered, right? One small move in the Fed funds rate has large reverberations for emerging markets. And then more like, and we're talking about markets, so we can put consumers aside, because I think the market and the consumer story has been disconnected, right? I mean, the markets are being driven by fund flows, especially retail fund flows, and I don't have a chart on hand, but I mean, we have to say that cheap money allows for cheaper margin. So if margin is not going to cost you very much, the demand would assume that there's going to be more demand for it, and a lot of the equity flows are margin driven.
But how are you finding the sentiment at the moment? Are people actually? I mean, like you said, this kind of market volatility, etc., creates opportunity. So are people excited? Are people, investing and looking to make money, or are they cautious?
Well, sorry for interrupting you, but there's a complete furor. But like this, take for example, that whole revolution started by Robin Hood in America has been happening here in Russia. And when I first started broking Russian stocks, there were no local players, right? Now, there's this St. Petersburg exchange, right, that has almost $7 billion of US stocks in custody here. And it's like a reverse ADR, right? That market trades $3 billion a day, to the point where, the exchange doesn't really have to add new assets, because they're trading amongst themselves. So it's a fully functioning, on an emerging market basis, highly liquid market. The sentiment, I think over 9 million individual brokerage accounts have been set up in Russia. That never existed. And so now there's a local bid, there's local demand for stocks. Russians actually own their stocks. Where, like if you look at the US market, if you go back to, when they instituted 401ks, right? Essentially you made anyone with a job and a 401k plan a buyer in the market, and every week or 2 weeks, or every month, whenever someone gets paid, right, money goes into the market. And that's always happening, right? So, we can't predict what's going to happen on the margin, but I don't think that trend is going to reverse. So the sentiment is very high, and everyone who's been investing, right, especially in Russia, 10 years is a long time, I think everyone is of the mind that, well, this can't possibly stop.
Well, right? I guess it's the future. Sorry to interrupt.
No, and I'm not saying it will, but I mean, a sane mind must entertain that possibility.
Like you say, there's some exciting potential, I guess, post COVID now. Like we've got to be optimistic and let's see what what inflation does, and how that will impact the markets and people's behaviors, spending.
Yeah.
But
what is technology doing to inflation? Right? I mean, we didn't have Windows Explorer until 1996. Right? I mean, maybe things are happening now that traditional institutions maybe don't understand or don't want to admit. Maybe we are in a deflationary world.
Yeah.
Because of technology.
Yeah.
It makes a lot of sense.
It does, yeah.
Right? I mean, Amazon, you're not going to stop calling Amazon.
No. I mean, like you said, it's that kind of loyalty, isn't it? You've been using Amazon all the way through. We've been using it through lockdown. It's been there for us. It's done everything. So why would we, stop using it post lockdown?
So Oxford Street will be filled with art galleries and.
Well, I think, hopefully tourism, like you mentioned, when people are traveling, I think Oxford Street, places like Oxford Street and, you've got Westminster are very famous, London monuments. And I guess same with kind of Moscow, you've got, is it Red Square? Yeah, Red Square. Yeah. But no, it's really interesting. And I think the emerging world, well, I don't know if, is Russia still emerging? Does it still count as emerging? But I think there's a lot to learn.
Well, I mean, things are changing so rapidly now, right? Because of technology. These terms, they're almost like anthropological, not really economic, right? So call it what you will, right?
Yeah. But it'll be interesting because, obviously, China, that their GDP is back to kind of normal levels and actually high. So maybe this recovery is going to come from the east.
Well, I think to recap, I think banks are well capitalized, rates will remain low, retail investors are driving, I think, fund flows in large part. If everyone's getting vaccinated, the lockdowns are off, you're going to see the real economy surge. Now, does that mean that it will catch up to the stock market, or will it drive it further? Those two interesting questions. Will it mean that cyclicals that maybe have been ignored in favor of technology will complete their catch up to technology? We don't know. Will a booming recovery bring inflation by driving commodity prices higher? Also an interesting question. If people are driving more and flying more, the electric car revolution hasn't consumed 51% of the kilometers driven on the planet yet. So I don't know if it's a complete threat. Oil prices will rebound.
Yeah, that's important. Oil prices, yeah. But then, it's important. I wonder if Elon Musk's investment in Bitcoin last week maybe will drive the popularity of Tesla, or maybe I don't think that was his intention, but maybe now that you could probably in the future buy a Tesla car with Bitcoin.
I think that's been one of the major problems of Bitcoin, is that's not really a currency. It's been a quote unquote store of wealth.
Yeah.
Right. And the only thing, and people call it digital gold, but really the only difference is that you can't drive a truck of gold across any border on the planet, right? Unless you've customs cleared it and et cetera. But if you can remember your digital wallet password.
Yeah. Which I have to say is incredibly hard. I totally forgot.
I'm just saying that you can get on a plane and fly anywhere and take your money with you. And I think that in essence is, if you're looking for a fundamental value of Bitcoin, it's the carry cost.
Yeah. Yeah, but I think again it goes back to accessibility. More and more people, especially kind of my generation, you don't see them buying gold, but everyone's interested in Bitcoin.
Yeah.
So,
and I think the technology is here to stay, and it's probably only a matter of time where this testing ground of all these coins become actual currency, right? When the digital yuan or et cetera. Right, and then if you switch to digital currencies, well then you don't really need a correspondent bank anymore, do you? JP Morgan's not going to stop your dollar transfer from China to Iran if there's a digital yuan, right? So I mean, the world is changing. It's very exciting, and I think if you look for a reason why the markets are rallying, it's because of that hope of technology and in technology.
That's interesting. Well, thank you so much. It's
My pleasure.
really interesting, and it's a pleasure to finally meet you, even though it's digital. Hopefully, one day
Likewise.
we'll be in person.
Let's do it again.
Yeah, definitely. But yeah,
hopefully I didn't use up all my interesting thoughts this time.
I'm sure you haven't. But no, it's been really interesting speaking to you, Michael, and I really hope that it doesn't get much colder in Russia, but say hello to all the EXANTE colleagues in Moscow.
I will.
And
take care.
And have a lovely day. Thanks.
Right.
Take care.
Bye-bye.
Bye. Investments are never easy. If they were, we'd all be millionaires. For now, I hope you enjoyed this episode and stay tuned for more. We're definitely going to be upping our episodes across the year. And like I said, we've got exciting things happening here at EXANTE. So sign up, follow us, subscribe, and stay tuned for more episodes. But for now, goodbye.